I'm going to make day trading course gurus go absolutely bankrupt. And here is how I'm going to do it. Come here. We are going to put day trading lessons on this channel for absolutely free. Things that you would normally pay for to learn trading from a day trading course or guru is going to be on this channel absolutely free. You no longer have to pay to learn how to become a day trader, because I'm going to give in-depth information, course lessons, everything that you can use, practical information that you can take and then learn how to become a profitable day trader. So with that said, you have absolutely nothing to lose. Subscribe to the YouTube channel because I'm gonna be putting out a ton of content. You're not gonna wanna miss it. I'm going to help you for free become a profitable day trader. And in this video, I'm gonna go over what I call a gap fill strategy. I have a couple different tools that I use to identify gaps and to see if we get filled or not. And I'm going to go over all of that in this video. This is a strategy that I sometimes use if we do have a gap, either gap up or gap down. And I'm going to go over it because a lot of times this strategy does play out. And I'm going to go over actual real statistics on how often this plays out using a tool that I use in my trading. So with all that said, enough with the chitter chatter. Let's jump right in. Let's share my screen here. And again, I'm going over a gap fill strategy, right? What you're seeing in front of you is a TPO chart. If you don't know what TPOs are, go back to a previous video on my channel. I go over what TPO charts are and how I use them. Now, looking at this data, all right, we're going to look at the 14th and 15th because this is where a gap happened, right? You can see the close here on the 14th was right at 410, 18,410. Right here on this arrow. The next day, we had an open higher than the previous day's close, which formed a gap. And look at this. We opened the next day at 18,506. Now, there's a gap here, okay? Gaps don't always have to get filled, but sometimes they do. And in fact, I'm going to go over a tool or show you a tool that goes over a statistic on how often that happens. But first, let's jump into the actual chart so I can show you what exactly this looks like. All right, so looking at this, here's the gap, right? Here's the gap right here. This was the 14th. All of this was actually, this is the overnight on the 14th here. So this was the 14th. We closed basically right here. Okay, this was the overnight pre-market, whatever. This was where the gap up happened. All right, this is the open, or sorry, so this was 7:30 in the morning, hour before open. This was the gap, and we opened up here. Okay, so the open was here, previous day's close was here. Okay, this was the gap. You can see the big candle going up here. This is where the gap got filled, right? This is how the gap got filled and continued its trend. This is what sometimes happens when you see a gap up or a gap down. I mean, gap down meaning if we close here, the gap down would have been we had a big move down and we opened down here, which is lower than the previous day's close. But in this case, it was a gap up. Sometimes gaps will get filled before they continue the trend in the direction that they are originally going, right? So like this, for example, we're in an uptrend, okay? And we gapped up and we filled the gap just to fill all of those imbalances there. And then we move straight back up into the direction that we were going. And so you can use that gap fill strategy to say, okay, I know we have a gap. Let's see if we get a little bit of that gap filled, if not all of it. And then see price continue the trend that we were originally going, okay? Now, it doesn't always have to play out that way. We could fill the gap and completely reverse and go to the downside. You just have to see how price reacts once that gap is filled. Now, we know that going back to the TPO chart, let's go back to TPO chart here. This is where we are. We closed here on the 14th. We opened here. On the TPOs here, we put some single TPOs on the first 30 minutes of the day down and filled this entire gap, okay? So once we filled this, then we started seeing price climb on the second minute, which is this B here. The second 30 minutes of the day, we climbed up. C, we climbed up. And the D period, we climbed up. We kept climbing until we consolidated. So the trend continued after we filled this gap. Again, this is a TPO chart. This might be confusing, but if you don't know what this is, go look at a previous video, right? And then going back to, again, the chart here, this is exactly what you saw on TPO chart. On the actual candlesticks, we fill the gap down and continue straight up. All right, now I'm gonna show you a tool real quick. I'm gonna show you a tool that I use that goes over statistics on gap fills. This is a tool called EDGEFUL. EDGEFUL gives you all data that you need, right? All the data, market context, clarity, everything that you need to know about the market, right? Now, I don't make trading decisions off this, but it gives me clarity on what happens in the market, okay? And so if you want to check this out, there's a link down in the description. Be sure to click on that and you'll go to EDGEFUL and just try it out for yourself and see if it works. But looking at this, I'm in futures. I'm on the NASDAQ, right? Which is what I just showed you in the New York session, okay? And I'm looking at gap fills. This is telling me that gaps get filled on the NASDAQ 62% of the time. This is gap ups, by the way, okay? This is a gap up. Gap ups get filled 62% of the time, all right? Gap downs get filled 57% of the time, right? And what I just went over was a gap up, right? This is exactly what you saw on the chart. This was the previous day's close. This was the next day's open. This is what a gap looks like, okay? And if we go back to the chart, see this? This was the previous day's close. This was the previous day's open. Gap up, okay? So going back into that, we know that this gap is going to get filled, what was it, 62% of the time, where it will come down and fill this and then continue the trend, or it will completely reverse. This is what a gap down looks like. Okay, this was previous day's close. This is the next day's open. We see they have a gap down. This might get filled, right? And we know that 57% of the time, a gap down will get filled, where it will come up, fill this gap, and then continue the trend, or it will completely reverse, right? So using the data from EDGEFUL here, I know that I can anticipate that 62% of the time, this gap up that we're seeing is going to get filled where it'll come down before it continues the trend in that direction. And so what does all this mean? Like putting all this together, I know I just went over a bunch, but what does this actually mean, right? When we see a gap up or a gap down, when we see a gap in general, we can anticipate that the market is going to try to fill that gap, okay? Does it have to? No. Nothing has to fill. In fact, sometimes it won't ever get filled. So when you hear people say on the internet or YouTube that gaps always get filled, no, they don't. In fact, we have data proven that it does not. That only 62% of the time a gap up will get filled, and at 57% of the time a gap down will get filled. Right? So it doesn't always have to get filled. But what we can do is anticipate it. Right? So if we see that we have this was our gap up, okay, and we have this consolidation on open. If we see that the gap gets filled right basically at open and price is struggling to go lower, we can anticipate that the market's going to continue the trend. Right? We see that we try to make lower, we can't go. We try to go lower again, we can't go. We have a big bullish engulfing candle, right? And so then it just sends us straight up to the moon. Okay. So we can anticipate, but we're not going to predict. We don't want to predict that something like this is going to happen. This was a perfect setup. It's exactly what you want to look for when you have a gap. You see the gap get filled and then it continues. But it doesn't always play out this way. Sometimes we could have this consolidation and then this pullback where it filled the gap doesn't ever happen, and it just sends us straight up, right? We consolidate here, then we just go bang, straight up. Or we come down, we fill the gap, and then we just continue straight downwards, right? It doesn't have to play out this way. But this is something that we look for in a high probability setup that we could anticipate and take, in this case, long in the market to go upwards. So this was a gap fill strategy. This is what I look for when we have gaps. Again, doesn't always play out this way. We don't always have gaps, but if we do have one in the market, that is what I am looking for. Guys, if you enjoy this content, again, I'm doing this completely free. I'm giving away strategies that course creators will put in their courses that you pay for. All right, this is information that you would pay for. There are very few actual real traders on YouTube that are giving stuff like this away for free. So if you want to learn and become profitable, again, absolutely free. Just subscribe. That's all you got to do. Subscribe to the YouTube channel, watch the videos. And I promise you, I'm going to help you become a profitable day trader in time. So like the video, subscribe, and guys, I will see you in the next video. Cheers.